I've got some Apple figures if you want me to go through them.
Sure, go for it.
Sure. So I've only got some quick ones. This wasn't a particularly exciting report. I think a lot of this can all come down to one excuse, which I'll deliver at the end. I'll let you deliver. But I got a revenue decline of about 5%. I saw that the services grew at about 6%. Products themselves fell 8%. Op margin of 31%, op cash margin of 29%. A small EPS miss, delivering $1.88. The big problem here was Mac sales, by the looks of it. Mac sales were down 29% year on year, so 7.7 billion delivered. I think it was 9 point something. But iPad grew 30%, wearables dropped 8%, services up 6%. Like I said, iPhone was down 8%. So that led to products being down 8%. I think the vast majority of the problems here were pretty much the China being locked down in November, or the China problems with the supply chain, and maybe a little bit of growth pulled forward. Was there anything in there that really jumped out at you?
I heard one thing being said, that the reason for the decline in MacBook sales, or Mac sales across the product range, is that they're basically just behind. They haven't released one lately, which is why no one's bought the newest Mac, because it didn't come out in time for that quarter to make a difference to it. The iPhone slipping back is never helpful. Services reached record revenues for them, which is still, as you point out, 21 billion out of 117, so it's still around, it's just under a fifth, closer to a sixth or so of overall revenue. So there's still, I want to say, room to run on that. It doesn't automatically make that bigger. But I was reading some of the headlines about this when I was trying to gauge reactions to it, and I read Apple stock gets nailed. Apple stock took a hit as Tim Cook said two words that terrified people. They were macroeconomic weakness, apparently. Apple has been nailed to the tune of up 3% today. It's not been a disaster. Well, it slid around a bit during the earnings call, but it feels like to me there might be some headlines that are not there by the time this podcast comes out.
True. Yeah. So I actually found a really good Twitter follow, which I'm going to recommend to everybody. It's called the account's called The Transcript. And basically what they do is they go through the earnings call and they pull out and put it in a really nice format the important bits of the call. And I've used the transcript today, so there's your little plug, to pull this bit out, which I thought was quite interesting from the call. I'm going to read it. It's verbatim. This is from Tim Cook. So let me discuss the three factors that impacted our revenue performance during the quarter. The first was foreign exchange headwinds, which had nearly an 800 basis point impact. On a constant currency basis, we grew year over year and would have grown in the vast majority of the markets that we track. The second factor, which we described in the November 6 update, was COVID-19 related challenges, which significantly impacted the supply of the iPhone 14 Pro, the iPhone 14 Pro Max, and lasted throughout most of December. Because of these constraints, we had significantly less iPhone 14 Pro and iPhone 14 Pro Max supply than we planned, causing ship times to extend far beyond what we had anticipated. Production is now back where we want it to be. The third factor was a challenging macroeconomic environment as the world continues to face unprecedented circumstances, from inflation to war in Eastern Europe to the enduring impacts of the pandemic. And we know that Apple is not immune to it. So Apple has kind of come out of this pretty well. So to me, it looks like it's pretty immune to it. I mean, you're talking about all these things going on. You're only declining 6% of a company of this kind of size when you're saying you barely had any supply in one or potentially 1.5 of the months. I think you look like you're pretty immune to it to me.
Here's the thing I haven't yet looked at from Apple. I mean, this is a stock that's clearly done very well. And in fairness, it's not just a stock that's done very well, it's a business that's done very well over the last however many years it's been. One thing, and I am an Apple shareholder, that causes me to... Here's the big disadvantage I think they have over the other tech companies, the Googles and the Metas. And I think those have disadvantages versus Apple too. But the big disadvantage I see for them is that their buyback pace is going to have to start slowing down quite significantly. So they made the move to try and accelerate their share buybacks to get rid of the excess cash on their balance sheet. I figured that was the right use for it. Buying back stock. Okay. Rightly, wrongly, that's what they were doing with it. That excess cash is running down quite quickly at the moment. So they're going to get to the stage where I don't doubt they will keep buying back shares, but the pace of buybacks is going to slow. And I think that will be something of a growth headwind for this company going forwards. Their EPS has gone ballistic as a result of all these kind of buybacks, even down 10%. They're still very, very impressive. Down 10% in the quarter, sorry. They're still very, very impressive. That's the thing as an Apple shareholder that makes me wonder, how are we going to look in 5 years, 10 years? I'm sure the answer is pretty good, but I think we probably won't have the same momentum, not that we invest for momentum in a stock particularly, that we've been having up till this point.
Yeah, I agree. I think it's well positioned, Apple. I think it's done fairly well. I like the idea that it's now moving its production not just out of China, but it's just diversifying its production a little bit. I think that's a really, really solid move. I've been quite impressed with the M2 chip that's in this Mac that I'm using at the moment as well. As I was saying to you last week, it's very impressive, the silicon that they're producing at the moment. So I think that's a really, really positive sign for them. That perhaps one that they could explore a little bit more as well. Not that I think that they would ever be interested in selling the chips to anybody else, but just to see what else they could get it into. What that is. And of course, we've got the Apple Car that can only ever be around the corner, can't it? And Apple VR, that's probably only around the corner as well. So I thought this was again, I think I'm going to, at the risk of repeating myself, this was quite an unremarkable kind of report. I think this was sort of much of a muchness. It all hinged on how we thought the Mac and the iPhone product had actually done. That was the only thing that we were really guessing at. The rest of it is just Apple being Apple, I think.
Yeah, pretty much. I think they do well to hang in there in this kind of situation. I feel like I'm with these kind of companies that have reasonable expectations built into them. Apple isn't terribly cheap. Has never really been hit sort of the way that some of the others have. I mean, we were talking about Amazon and Google, and we will talk about Meta, and those have all gone up significantly-ish over the last week, even giving some of it back over the last day. But that still puts them a very long way from where they were sort of a year ago. They're still quite significantly down. Apple never really got clobbered by that. They got treated differently by the market for whatever reason. And they, I sort of feel like that makes them vulnerable to bad news, or their turn to have the bad news in a way that the others maybe sort of have a bit of it built in at the moment.
Yeah, and it's not materialised today, has it? Because you would have thought this is probably their bad news. So I know that when the report came out, immediately they dropped about 3 or 4%, or maybe 2 or 3%. But then it was soon back at only 1% red, and then I got a message maybe 10 or 15 minutes later that it actually already gone green, and then that's what it's continued to today. I mean, this isn't the sort of report that you would see a 3 or 4% increase in the stock price, and also the guidance wasn't that great either. The guidance was fairly flat, so it's a strange one for me. This I feel like it feels like a new bull market, doesn't it? In a strange way, it feels like, you remember when bad reports were coming out and stocks were going up anyway. That kind of felt what this felt like in 2021. Which is like, haven't we learned our lessons with results that aren't that good? They're supposed to go down. I wonder what the market's seeing, because there wasn't anything in there for me that I thought, I'll bid this up. This is something I need to buy right now.
No, this is Apple's first miss in quite a while. They're quite good at playing that game, for what that's worth, as well as various other games they're pretty good at playing too. We've been wary about calling new bull markets before, because we've had plenty false dawns on this, and I'm not convinced this isn't another one particularly, but I think when I look at this at the moment, it's quite interesting watching how these are faring, because big companies like Amazon, still huge market cap on Amazon, still huge market cap on Meta, which we'll get to. They're not supposed to move around like that much. That is quite a lot of money entering and leaving these stocks one way or another. And I get that institutions have quite a lot of money, but shifting Apple must be still close-ish to 2 trillion, probably through that. By 3%, 5%, and so on is quite a lot of money to be moving around at any given moment.
Yeah, and if you thought we were going back to the years of the steady 10% and what have you every year and looking for the steady 10%, unfortunately we've been wrong so far, haven't we? I think the market's probably up 10% just in January. So it's been a fairly odd bunch of moves. I mean, this week has been nuts. This felt like 2021, 2020 stupidity when there was just so much liquidity in the market, and you couldn't lose this week really. I think everything